All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Hope you had a fantastic weekend. Market getting off to a very interesting start here this morning. And you can see, I'll zoom in here on futures. You can kind of see what it's done. We saw this kind of, thrust higher right at the open. And then that got sold and pushed on down. And, this is a 22-point sell. And then quick snapback, and it's just almost back to the highs there. Some pretty choppy action, to say the least, there with it. But nothing to be too unexpected. First day of a new month is it's one of those where we see strong buys come in. Sometimes the market ends with a loss, sometimes it ends down, but we often will see a thrust or two as some of the kind of forced money, gets put into the market from IRAs and pensions and other types of things. So it's just one of those where, not uncommon to see. Now, why did the market drop? Well, you just have to take a look at tech, and specifically the Amazons, the Microsofts, the Facebooks of the world, being driven lower with Google as, there's some U.S. government action looking to take place against Google, antitrust type action, which just kind of fuels concerns for the entire sector. But the kind of the trade profile this morning, the sector profile, is actually really bullish. We have just a little bit of time before we have to go to the challenge, so let me come and show you. But it's actually pretty bullish. Let me show you the sector summary. Materials, they're up 1.6%. Energy up 1.5%. Financials almost up 1% this morning. Industrials almost up 1%. I mean, these are the sectors that have been getting hammered. Right, these are the sectors that have been, really getting sold off, and then we kind of come down and consumer staples, they're up a little bit. Real estate pretty flat. Utilities pretty flat. Tech flat, but if we come down a little bit more, you'll see consumer services sector fund, right? Well, this is an interesting fund, the XLC, and it's lagging big time here today. 40% of the XLC is made up of Facebook and Google, right? So 40% of this ETF is made up of two stocks. And, if we take a look at Google and what it's doing today, you can see it's just, I mean, this is a stock down, 25% in the last month. Just absolute kind of train wreck here for Google. And, Facebook, some sympathy sell here today with that. And we see Amazon down here with that. And, Amazon triggered bearish here on the algorithm right back here. And it's, been flowing downwards. It had a few kind of flat days, but flowing on downwards here. And just one of those situations right now where, if Google, if they're going after Google for some antitrust, well, you think of all the different pots Amazon has their fingers in and influence that Amazon has. It's a short hop, skip, and a jump to go after Amazon for antitrust. But, these companies have been through it a ton when it comes to Europe, right? They've Microsoft, Google, they've all dealt with the antitrust allegations and issues there. They know how to fight it. They always have. And will they ultimately snap back? Yeah, probably. But in this environment with the market vibe bearish like it is, where the market chop is what it is, you get this type of news that's going to drive the stocks lower here. So it's a very interesting dynamic here in the market today, where some of your if you looked and said, hey, the market's green today, you'd expect Amazon to be leading the way. It is being overcome, not leading the way at all here. Okay, all right. So let's go to the challenge. Here we are, 10:30. Entry triggers this morning. There are no new triggers. There are some things that are very close. And in fact, Walmart, if it were not the morning, Walmart would be triggering bullish. And I've said this before. The morning trigger is a little tighter. right? The morning trigger is a little tighter because of just some of the intraday volatility that has to be factored into play with it. But this is one where if it were to close like this, it would be a bullish signal here on Walmart. So that's the one that is, that's on the board that, would have a trigger here if it were, the afternoon. So no new triggers to adjust to. We do have a position here with gold that we adjusted on Friday. We're still in, and the last trade price here, 124.41, and the exit price here for the GLD is 124.88. So we're just shy, about 40 cents, 50 cents shy there of, hitting the second exit target. For GLD, the option price here on it, 412. So we'll put that in here at 412. Let's see. I want to make sure I get it in the right spot here. There we go. 412. All right. So pushing the challenge up over 5,000, which is nice to see. For 4 trades, sitting there with about 60% gain on the challenge, I'll take that, especially given the environment and what we see happening on out there, and just some of the real lightness in terms of the number of triggers, right? I mean, there just haven't been a ton of triggers here. We had Amazon, which kind of whipsawed, gave a bullish signal, and then a bearish. The bearish has played out very well. The bullish, did not play out, but couldn't trade Amazon either way, either time, simply because of the price of the option, not having enough cash in the challenge yet for that. We've seen Raytheon trigger bearish. That got whipsawed, but ultimately, Raytheon's pulled on lower. Chipotle ran higher nicely after its signal. JD, we traded. The options were tradable, so ran here with that and, got knocked out a couple on the time stop before it reversed. Same with Procter & Gamble, same with J&J. So, we've really only had one trade this challenge, actually go and hit price target. And so to be sitting where we are with the challenge with that, I'll take that. I'll definitely take that, and look to pounce on the next signals that come in. Okay. The news out there this morning and everything else, I alluded to it a little bit this morning in my note. Just it was kind of China's weekend to fire back at the U.S. and they put the blame for trade negotiations breaking down squarely on the U.S. Just squarely on the U.S. We had President Trump say his favorite word is tariffs. So, no real de-escalation, right? It's all escalation, no de-escalation. We did see U.S. President Trump lift some of the ethanol restrictions, which is going to help corn farmers, which is, a move that, you could say, hey, is political, and you'd probably be right. But since some of the trade war stuff is hurting some of the farmers, it's one of those where, stepping in and doing this, now helps them. Can you win back some of the political there? We'll see. But, bottom line is it's an ongoing saga. It's going to continue to be an ongoing saga. And it's not going to end today. It's not going to end tomorrow. Not going to end next month. And it probably will not end by the end of this year. So it's just something the market's going to have to deal with here for a long period of time, and some of the ebbs and flows that come in here with that. Okay. All right, so that's where things are. Here this morning, market looks like market's trading in the green right now. So he has pushed on up, but you see the Qs, strongly in the red there. So very differential market here this morning in terms of where some of the money flows are going here this morning. Now, this weekend I was asked about the challenge, and a very good question came in. And on Friday I made the comment the market vibe is a -10, and that's pretty oversold. And a lot of times we see some pretty heavy bounces off of that level. The one thing we know about minus 10 is the market never stays at never stays at the level for very long. Right, we're either going to get a lot of flush to the downside or a really nice bounce in the market. And I'm not talking about a 1 to 2 day type of thing. I'm talking about a multiple day, multiple week type of thing. And that's the history there. And the question came in, it said, Jeff, looking at the challenge watch list, right, these 60 stocks, is it possible for the algorithm to trigger upside trades right now, given that most stocks have hit new lows and most stocks have the stochastics below 50? That's a really good question, right? It's one of those where, okay, with where some of these stocks are, and I've made the comment, something like a FedEx, it has no chance of triggering bullish anytime soon, right? It's 3.7 where it is. Very negative. And even on the first crossover of the 3 and the 7, it's not going to trigger bullish. It just won't. The algorithm's not built for that. The algorithm is set to look for higher lows and more propensity for trend, not to play the bounce, right? Not to play the small bounces. And so it's just not going to trigger. And I know that, I understand that, and it's going to take weeks, and it's going to be just one that's on the watch list that's kind of dead for a little while. There's a better chance of it triggering bearish after a bounce higher, and then another roll to the downside, right? Obviously, something could change, but that's the most likely. We have a lot of stocks on the watch list that are that way. Halliburton, Schlumberger, right? Alcoa, right? There are a lot of stocks in the same position. U.S. Steel, they're not going to trigger bullish on a bounce. U.S. Steel's up nice today, and yes, is it tradable to the upside today? Oh, I think so. I think you trade a bounce back to 14 here on U.S. Steel. I really like it. You put a stop on today's low. You look to trade it back to 14. There's a nice oversold bounce type of trade here with it. Now, the challenge algorithm is not going to grab that and say, hey, let's go trade it. So, hence the concern of, hey, you know what, is there a chance that some of these stocks can trigger bullish? And the answer is absolutely. Because while, yes, there are a whole bunch that look like U.S. Steel and Halliburton and Alcoa, there are a lot that have held up remarkably well. Here's Disney. Disney 3.7 crossover most likely triggers bullish here on the algorithm. I can't guarantee it, but most likely does. Visa, Honeywell, Pepsi. In fact, Honeywell could trigger today. Pepsi as well. Twilio, is in a position where it could trigger, right? In fact, this morning, when it was trading on up, I thought, man, you know what? This might actually show up. It didn't, but we see it reversing, so it's not a trigger here yet. But this has a potential for an upside trigger. Walmart, like I mentioned here just a moment ago, if Walmart ends here by the close, it's an upside signal. So yes, there are plenty of stocks on the watch list that could give upside signals, if the market decides, hey, it's going to, reverse, go to the upside, and some of these stocks, kind of lead the way there, right? But yeah, I mean, you're absolutely right. It's not going to grab the Alcoas and bottoms. It's not going to grab a U.S. Steel bottom. It's not built for that, and it's not one of those where where I even want it to, right? Bottom picking is fun every once in a while, but that's it. Here's Microsoft. You'll notice the 3.7 downside crossover, and I'm watching Microsoft. I'm watching that happen. I go, okay, great. Great. Sells off a little bit more. Gets down to this 120 where I think it's going, and stabilizes there. We start to see a little rebound. Yeah, I mean, great chance of signaling to the upside. So there are plenty of stocks on the watch list that have a good potential of triggering to the upside. But during the course of any challenge, we will see stocks, go from having triggers and, giving signals to, being left in the dark for some time, right? FedEx, as I've mentioned a number of times, we even mentioned it live on video when it happened, when it gave the downside signal, right? It was one of those where we weren't running a challenge at the time, gave the downside signal, and that downside signal has lasted for a long time. It's been on a nice, beautiful trend. And so after something goes on a nice big trend, normally it goes into a consolidation phase, right? And the challenge is looking for stocks that move from consolidation and push into trend. And a lot of stocks like X and HAL and FedEx, they need to go to consolidation before anything. And a lot of times, consolidation means a strong bounce to kind of set the upper limits there, and some sort of retest of lows. That'd be normal, but again, stocks don't always behave there in that fashion. So bottom line, yeah, there will be signals. There'll be plenty to trade. I don't know how many signals. I know historically it's 3 to 5 a week, given a watch list of this size. And, we're a little under that right now in terms of the number of triggers. If we look at the entry triggers, we're at 1, 2, 3, 4, 5, 6, 7. We're at 8, 9 triggers in a matter of, 16 trading days. So, we're just what, about 3 a week? There. But 1, 2, 3, 4 of these triggers were not tradable because of the value of the options with Chipotle and Amazon, both of which I added to the watch list just in anticipation of seeing the challenge run. And hey, you know what? We could trade those later on this summer as the challenge has more funds here in it. Okay. So hopefully that kind of answers that and kind of takes some of that away, or some of that concern away there. All right, now last thing I want to go and take a look at with you here is GLD and the GLD trade, because of the fact that it's one where we've had a little bit of different activity here with it compared to, what we saw with any trade so far. And when I did the test, which, was kind of the last test before taking this live, it was one where, that test was set up, and I mentioned it when we started it. Some of those tests, those 3 baskets were set up to fail. Right, and it was not set up for success because needed to test what was going to happen with certain things. And, so we didn't have a trigger that hit a price target, that hit a area like what we had to do with GLD and pull off some and run with the rest. And one of the things about GLD, and when I entered it, right, we entered a fairly conservative option, right? We entered a June, a July. I have this written incorrectly on the spreadsheet. Yeah, we entered a July contract here on the GLD. And, that's a $2 option, not a huge delta on it, right? A fairly conservative option there with it. And when I pulled 3 contracts off on Friday, that left the whole delta on the position to about $300. So we need gold to move up $1 for a $300 gain. Yeah, it is one where absolutely took away some of the risks and some of the upside as well with taking away some of the risk. When it comes to applying the options here to the signals, it's one of those where we know the challenge setup, right? We're going to go out 30 to 60 days, right? Options chosen are 30 to 60 days, and they're at the closest at the money strike price. Well, you know what? For different stocks, 30 to 60 days, there might be 4 different strike expirations within that period. So there's a choice, and obviously going longer rather than shorter means that there's less risk, but also there's less reward. Then if we pull some off, it will change that. But one of the things that we can do when we pull some off, and one of the things we could have done with GLD, is I could have pulled off 40% of the total value by selling it, by cashing it completely out, right? The option that I had, cashing it completely out, and then running with the new at the money strike with the cash, with that other 60% of cash. And you'll see, we'll do that during this challenge. We'll do that several times, right? I chose not to do it this time, just for simplicity's sake, and the challenge is still kind of in the early steps. And, just want to be a little more conservative than aggressive, just until we start to really kind of pump in some of the gains. But there are those things that, are left to my discretion there where, I know the odds. I know, I understand that a day after the trigger, when there's an average true gain or, a move of 2 in the average true range on the stock, there's a 63% chance that stock clicks to another 2 average true ranges, right? So what does that mean, right? We entered on the signal right here. And day one, right, we got a move of 2 average true range, which I don't expect on any trade, which isn't going to happen on most trades. But when I go back and look at the data, we've seen this happen, quite often. I shouldn't say quite often, but many times, right? It's not an unusual thing. But after this type of move, there's a 63% chance that the stock moves another 2 average true ranges to the upside before moving 1 average true range to the downside. Now, 63%, that's pretty good. 63% in a market, that's pretty darn good. In terms of a probability. Is it as high, is it as high as it was on the entry? No, it's not. The entry has a higher probability. But 63%, that's still pretty good. So it's one of those where, we know the numbers, we know what the odds are, and, how much do you want to put? How much do you want to put and how much do you want to go with? And so if you want to be more aggressive, feel free. If you want to be more conservative, feel free. I'm just showing you what I'm doing and, how I'm running with the, the signals that come in. And we'll continue to do so. But I do have those 2 options, and it's one of those where let's just say GLD we're 40 cents higher, right, and sitting at the 2 average true ranges above. Now we have a position that's only 60% of the original position in terms of number of contracts. If I just go pull off, we have 4 contracts. If I go pull off 2, that leaves us with 2 contracts on the board, a delta of 200. That means, even if GLD rallies big, we're not going to make anything, right? The gain is going to be so muted that, why bother with the risk? Why bother continuing to hold it? So I would have to make the choice of either closing it out completely and just moving on, waiting for the next signal, or take the dollar amount, take 40% off, right? 40% of the dollar amount off by closing the entire trade and putting 60% of what that was into an at the money option to get the torque and to get the exposure or the reward potential back into it. So both of those are on the table. Both of those are options that that we have and can play with and run with as trades run and as they move in our favor. Okay. So hopefully that that answers the questions, and if there are any concerns on that, please let me know. Happy to help you out there with that. Okay. So anyway, that's kind of a little bit of what's going on out there this morning. Again, no changes here to the challenge. Walmart, if it closes here, will be an entry. So we'll take a look at where that is here by the close. I love trading Walmart. Historically, me, I'm a big fan of trading Walmart. Normally the options are really nice. If we go out to the July options, right, 46 days, they're not so nice, right? They're right in between 2 strike prices, so it's a very kind of funky level here for it. But if we come into the 5th of July, we can take some of that out and get into kind of the 102s or the 103s and get a much better situation. So it is one of those where, yeah, the monthly probably not not a legitimate entry area, but some of these weeklies that have been opened up here, last week, definitely on the table to be able to trade. Thanks for hopping on. Have yourselves a great one, and we'll talk to you this afternoon. Take care.